We got like 30 seconds. I mean, we're okay. Oh, there we go. All right. So it is 5 o'clock. Notice was given that on March 26th, the Board of Directors of the Hood Central Appraisal District will meet in regular open session at 5 o'clock at 1902 West Pearl Street in Granbury. I'll call this meeting to order at 5 o'clock. We do have a quorum with Mr. Wall being absent today. Y'all are on the agenda, so y'all don't need to talk as guests. We don't have any guests, so we'll move right into our action items. Action items being the consent agenda, which would be to approve the minutes of last meeting, approve our financials, and then we have two invoices that we need to approve. Is there anything y'all want to pull out, or y'all good on the consent agenda?
Good.
You good? All right. Then, is there a motion?
I'll move that we accept the consent agenda as presented.
Second. And a second. Got a motion from Richard and a second from John to approve the consent agenda. All those in favor say aye.
Aye.
Any opposed? Ayes have it. All right. Then our next general action items is to discuss collections contracts.
Yes, sir. Thank you. I'll try my best to be quick so we can get out of here since it's warm.
Yeah.
We, as you all know, are the appraisal district, and we collect property taxes for all the tax entities in Hood County. It's been that way since I think the day we opened the doors. I wasn't around. You were in Chicago in 1985. I was graduating high school in 1985.
There was a short period of time where the county wanted it back, and then they gave it back real fast.
That happened in 2016.
They realized they didn't want any part of that.
So the appraisal district has a contract with all the taxing entities, save and except Hood County, Crescent Mud Utility District number 1, and Crescent Crossroads Mud. Okay. And the reason that I'll talk about them differently.
Okay.
But all the other entities that we collect taxes for, we have a contract that's dated 1981.
Yeah,
I did the math today. That's 45 years ago. And I had brought up last year probably the need to an updated collections contract. And that's what we're presenting tonight to the board to look at, review, ask questions, whatever we need to do. Obviously, I'm not asking you guys to sign anything or anything. This would be a contract that in your motion, which we'll talk about here in a second, would authorize me to engage and sign the contract with the taxing entities. So what I did was I asked these two gentlemen behind you guys. These are Marcus Hanna and Jake Battenfield. They're from the Lineberger Law Firm. They do our delinquent tax collections for us. So I asked them to help me update the 1981 contract to a more modern, up-to-date contract. And mainly the main reason behind it was, one, a lot of statutes have changed since 1981. The legislature, they do meet every 2 years. I won't tell that joke. We're recording this. But that's the product that I've presented to the board tonight is basically an updated contract. It would be an interlocal corporation. I'm not going to read this thing to you. An interlocal corporation agreement between the appraisal district and each of the taxing entities. One of the things about the 1981 contract, it was one document, and it was between the appraisal district, and it listed all the taxing entities. And It was like all the taxing entities signed this one document. What my plan would be is to take this document to each taxing entity and have each taxing entity have their own individual contract with us to collect their taxes. Basically, outside of bringing the document up to statute standards, it's kind of the same product that we had in 1981. Basically, we would collect all the taxes for the taxing entity. We would make a report of our collections. We would disperse our collections, the collections that we made, to the entities. We would pick the law firm that would defend the delinquent tax issue and collect the taxes. One kind of, if you want to call it a substantial change, but it's not a substantial change, is we would we would we have put a thing in here that says that any tax certificates that we sell to the taxing public, the appraisal district would keep that tax certificate instead of reimbursing it to the taxing entities. Now, let me put this in perspective. If a property owner wants, they can come down to our office, come to our front counter and says, I want to buy a tax certificate on 123 Main Street. It'll cost them $10. It'll get them a document that basically says, here are all the delinquent taxes that are owed against it, or here's a statement saying there are no delinquent taxes owed on this property.
Mm-hmm.
For $10, it's the best insurance you can probably buy,
Mm-hmm.
and they can walk out of here. Well, we have that $10.
Mm-hmm.
We do that enough times that we collect somewhere between $1,200 and $1,500 a year in tax certificates. Question.
And I don't want to interrupt you if you don't want me to.
Mm-hmm.
Do y'all real estate transactions? Every real estate transaction has one.
Mm-hmm.
Do they all go through us, or
No,
okay? Because there's other entities where they get their tax certs from.
There,
Okay.
and they charge about 60 or 70
Yeah,
bucks for
yeah.
those. Sorry. Well, what they are not a certified tax certificate. What they're doing is there's some companies out there that are saying we will do the
They'll
research
insure it,
and
yeah.
we'll take the risk on whether or not it's a valid certificate.
Right.
Our tax certificate, which is done under state law, says that if we sign a document saying that there are no taxes owed on this property from this date backwards, the property owner has the right to come in and say, I bought this tax certificate, and the law says that we shall delete any taxes that we find later that we did not report correctly.
Mm-hmm.
The tax certificates,
The real estate ones are not that way. Yeah.
They come in and says, well, I got a tax certificate. Then you need to go talk to the people you bought that tax certificate from. They're the ones that
You
are
got to go to the
insuring
title
it,
company
not
at that
us.
point.
Absolutely.
Okay.
Ours are $10 by state law. Theirs are 60, 70, whatever bucks for state law. The problem and the reason we're changing this in this contract is almost every appraisal district that collects taxes on behalf of the taxing entities, they all keep this tax certificate money. The software that we use doesn't really have a process in which to divide that $10 among the county, the city, and the
11
school,
entities. Yeah.
or the county and the school. So what Jody winds up having to do is using a 10 key and a 10 key tape, calculate how much money should go to the school district, the city, and the county, and winds up cutting the paper on the 10 key tape and stapling it to. That's not the best way to account for this.
Yeah. No.
Now we're only talking about $1,200 annually. So it would make it way simpler and way cleaner if we just kept the tax certificate money, just like all the other appraisal districts do when they collect it.
Okay.
And then at the end of the year, when we start talking about, well, we had excess revenue over our expenses and we're going to refund monies back. In theory, that tax money could be refunded back at the end of the year when there's money left over. So we're not talking about a situation where it's going to put the city of Granbury, the city of Toller, or La Penn into a hard spot because their part of the $1,200 is going to be double digit most likely.
And it's not a situation where we're trying to make income.
No, we're not. It's just it's actually a better accounting process, and it looks way cleaner when you don't have a 10 key ribbon stapled to a report saying this is the accounting for the tax certificate money.
Okay.
So they'll either get it back at the end, which most likely they'll get it back at the end of the year. So that is a change that we've put in here. Another thing that's still in this contract is the truth in taxation calculations. Basically saying that we would still continue to calculate the no new revenue rate, the voter approval rate, and we would also prepare all the forms. Now, the one thing it does say is that the taxing entities will be responsible for publishing the forms and paying for the fee in the newspaper, which they're technically already paying for the fee when our budget's going to go down a tiny bit, so they won't have to pay that fee to us in advance. We ran into a situation last year, which is one of the things that prompted us to start this process, is that the county kept putting off their meeting that they were going to discuss the tax rate on. And the law is very specific that it's got to be in the paper at least 10 days in advance of the meeting that they're going to sit and either adopt or talk about the tax rate. And then when you have a newspaper that only publishes once a week, it's a lot of juggling juggling around of when you get that to the newspaper. Well, we were afraid, the appraisal district was afraid that we were going to mess that process up. We were going to be bumping up against the September 30th deadline, and the county was most likely going to come back and say, because y'all didn't get that paper at the right time, we couldn't adopt a tax rate and this and that. So that is something that I want to say, we'll prepare the notice for you that needs to go in the paper, but you know when you're going to meet, you know when you're going to sit down and do the taxes, you be responsible for getting this in the newspaper when you want to get it in the newspaper. And then it takes the burden off of us having liability that, oh, we didn't get it there fast enough, and therefore they couldn't set a tax rate. So that's a change that's in here too. So there are not really any significant changes that are in this document, but it does bring it up to current, brings it up to statutory issues that have been changed over the years. And those two changes where we want to keep all the tax certificate money, and we also want to make the entities publish their own notice in the paper whenever they're going to have their meeting to vote. We are not required by law to do these calculations. We do them because Susan's been doing them for 20 years.
Yeah.
But if there's any taxing entities that want to take that on themselves, the city has been one entity that has shown not maybe some interest in Ava down there at the city. She's wanted to know kind of whole nuts and bolts of the whole thing. I've gotten the impression that she might even be interested in just doing it all.
Yeah.
And we would not be opposed to say, if you want to calculate your own rates, you can.
Have at it. Yeah.
You can. It's an 82. Remember back in the days when you used to fill out your 1040 form? It was, take line 2 and line 8, multiply them together, divide by 4. It's kind of like that, but there's 82 steps that you got to go through on these documents to get to the bottom number, the two bottom numbers you're looking for. But they're more than welcome to do it.
Yeah.
We'd be more than happy to
Wouldn't upset you.
allow them to do that. So I didn't get any phone calls from any of you about this, but if you have questions, I brought Jake and Marcus. You know what? Before I just open the floor up for questions, do you guys have anything you want to throw out or say? And
Kind of any intro to it?
No, I can take, like Jeff said, not Jake. There's not really any substantial changes to it. It's an update from 1981. We went through and made sure that it's compliant with the statutes as they are in place today. We also made sure the processes in place with HoodCat right now conform with what's in this contract as well.
Okay, good.
And one other just minor clarification, the money he's talking about, that $1,200 to $1,500, it's in the statute that those that are writing the tax certificate can keep the funds. So he hasn't come up with that on his own.
Okay.
In the statute.
Good.
and it makes the economy look better.
Yeah.
So do you guys have any questions about the contract that, yes?
I do. Would it be helpful if we had a section or receiving a section on what reports we're going to give these entities?
Well, actually, we
Really
do.
clear.
It's 4.8.
I was about to say,
page 4.
just happened to turn to that page. Yeah.
Yeah, it says HCAT shall prepare and provide jurisdictions monthly reports made under oath of jurisdictions property tax assessment collections received. Reports of collections made in the month of October through January are due on the 25th day of the month following that, the month that the subject of, sounds just like a law, doesn't it?
Mm-hmm.
This is copied right out of the law.
Okay.
Yeah, reports of collections made in all other months are due on the 15th day of the month following the month of the subsequent report. HCAT shall prepare and provide to jurisdictions a cumulative annual jurisdiction to report tax. Reread that. HCAT shall prepare and provide to jurisdiction a cumulative annual jurisdiction's property tax assessment collections and receivable report made under oath of conclusion of the calendar collection year. So all of those are required by statute.
Right. But what I was getting at is, and I'm thinking of our little situation that the mayor keeps bringing up.
Yeah.
Okay. Are there other reports that would be helpful to give to these entities? And I'm thinking so that they don't come back at some point like we are in, dealing with now of, You tell us this or tell us that.
Well, we're more than happy to prepare any kind of extra type of report. Yeah, Jake?
4.1
What?
or 4.1.
Yeah, you're right on 4.1.
Yeah, 4.10. Sorry, 4.10.
Oh, 4.10.
That's the audit. But I think you're right talking about 4.1 also, because this is 4.1 is the tax roll, the no new revenue that Jeff was talking about. Submit the reports as required.
Yeah, that would be that'd be a lot of the truth and taxation
We're getting that on the
requirements.
front end, and then the annual audit is what we kind of.
Another thing we do, John, is not only do we give them these required reports, but we also on our website, if you go under information and down to collections. No, it's on the report section. If you go under reports and go into the year, you'll see a whole list of collection reports that come out of our system that we're making available to public and anybody that wants to go look at them. But it'll show current collections, prior year collections, and we do that on a monthly basis too. But if there's any other report that someone from the taxing entities or that says this would be beneficial, we most likely would have to create the report. It's not something.
Are you
Right.
are you talking about like the reserves questions that he was asking?
I'm thinking more of, what I keep hearing from the mayor of these things went on, nobody was aware these things were going on, that sort of thing. I don't know how I don't know enough to really know what questions that we should try to answer.
Well, let's keep in mind two different things. The collections report that we're talking about here, and there has been confusions about the monies. The taxing entities pay us monies for us to operate. We call that the operation or the financial audit, the operation side. The property owners pay us a lot of money. That is the property tax collections. That money comes into us and it turns right around and goes right back out to the entities. We don't ever touch this money that comes in as property tax collections. This contract has everything to do with this property tax collection side of it. Now, a lot of what the mayor's been talking about has been the operating side, the monies that have come into us. And I won't say the mayor, but I don't think this has been the mayor, but there's been a lot of stuff on social media where people have made comments that we must be taking the collections money and wanting to build a building with it, wanting to add to the retirement system. And that's just complete false information, because this money, it comes straight in and it goes straight back out to the entities. And those are the reports that we're posting online with, here's the money we took in, here's the money we sent out, that type of thing. So there's been confusion about these two pools of money. This is the one we get from the entities that we pay postage with, we pay the auditor with, we pay salaries with, and all that stuff. This over here is a completely different bucket of money that comes in and goes out. So the reports that we're talking about here deal with this. Now, it's not to say though that we can't come up with possibly other reports that might answer questions. I will say that we're being a lot more transparent from a standpoint of putting these reports on the internet. Plus, everything about the operating side is sort of covered in these financial documents here. And we put this whole packet on the internet as well. And that's never been done in the past. So ever since I got here, did we start 24?
Late 23.
Late 23 or 24, I started putting all these packets on the internet so that everybody could see. And you can go back and look at every one of them month after month after month, showing here's our revenue and here's where we spent the money. And so that, if there's other reports though, I'd be interested in knowing what you're thinking about.
Well, I don't know yet.
Okay.
It is something that, we should really talk to the entities with and make sure before you enter into something like this. I mean,
Well,
I'm looking for transparency. I'm looking for ways that, we don't get in trouble later.
Yeah.
Have there ever been any denied requests though?
No.
Yeah.
Yeah. And on top of that,
Ask the question.
the reports that we send out with the collections, I've never even gotten a call from anybody saying, hey, we got a problem with this, or can you explain this or explain that? It's all been clean. No issues. Those ladies over there do a pretty good job of making sure that everything balances and everything's good before we send out
The
anything.
process we started last year of doing an amended budget at the end,
Yeah.
late in the year, and showing where all the money really went versus the guess of a budget at the first year, because you're never going to guess exactly right.
Right.
And
The estimation.
yeah, it's an estimate. Yeah, you take your best shot at it and you estimate it, and then this one goes up and this one goes down, and this happens or that happens, and at the end of the day, we did the report, and last year we spent $167,000 on the forensic audit.
Right.
It wasn't in the budget at all, but we showed where we got every nickel of it from.
Yep.
And taxing entities could say, okay, we know what they're doing. We do that every year.
Yeah.
It should forestall the mayor's type of issues that money was moved without telling the taxing entities.
And I'll say in times past that level of communication back to the entities was not done. In fact, when you read the forensic audit, you'll find that it says in there that this and this and this was done through the minutes and through board meetings. And while I'm not required to go get approval from the entities on anything except one item, and that's to build a new building, the auditor said, but none of the taxing entities disapproved of these actions, which is their right to do. The taxing entities have a right to disapprove any action that you do. That's it. But if we decide to build a building, buy a building, lease a building, actually the law's changed now. They had to approve us to be able to do that. Now the law still is if we want to go buy the building next door, let's say. That's up for sale, by the way.
The old movie theater.
Yeah, if we want to go buy that building, we would have to go to the entities and seek their approval. What changed in the law was this. It used to be that 75% of the entities had to say yes and approve it. And if an entity took no action, that was a no. They have flipped that now to where if we want to seek approval on a building to buy, we have to do the same thing, go to the entity, seek their approval. But if a taxing entity takes no action, that's now a yes.
Okay.
So they have to take
So they
specific
made it a
action
little
to
easier.
say no. But if they choose to not take any action, then that's a yes vote.
Silence is consent.
Yeah,
Yeah.
so it's actually a little easier now for appraisal districts to look at new properties or whatever. Because on the other hand, if they just forgot to vote, I mean, it was a no.
Right.
And so it was pretty much.
Jake's got a point for us too.
Yeah, I was just gonna bring up the point under 411. Not only is Jeff being proactive and actively posting the records that anybody can go through to see that money and how it's spent, but in 411, any jurisdiction can come back and request to take a look at any of the records, and in a reasonable time period that HCAT has to approve it and provide those records to it. So he's proactively already doing it, but if they want to look at something specific, they just have to make a request, and it's in the contract.
And we've got a really good relationship with all the entities.
I think by now you would.
Yeah, oh yeah, and even though Emmett Whitefield has announced
He's
his
retired.
retirement, we've got a great relationship with Emmett. We've got a great relationship with Ava down at the city, and we've got a great relationship with Stephanie. Thank you. I want to call her something else ever since, but Stephanie Matlock at the county.
It's not a negative name. It's just
No,
a different
it's
name.
just a different name, like Michelle or something. But we've got a great relationship with them, and they get the lion's share of all the tax dollars.
Yeah.
And then Toller ISD, Lipan ISD, we got good relationships with them as well.
So my only question is, and this is just a technicality issue, as we send these to the entities, if one of their lawyers comes back and tries to redline it, we're able to go to y'all and, hey, y'all get with them to work out the differences,
Or we can just say no.
or we can just say no. Okay.
Yeah, I mean, we
Not that they would, because this is more the collection side, and this is
Yeah.
just us saying, hey, this is what we're going to do.
yeah, I mean, again, this contract doesn't They can do that, yes.
Yeah.
But this contract is done in such a way that it mimics what we've always been
Right.
doing. And
Really, it's just us saying, hey, we're getting legal again. We're getting
yes,
up to speed.
and we're getting back to up to date.
Yeah.
But if they wanted to come back and redline it, one option can be, well, if you don't want us to collect your taxes, you can collect them yourselves.
Right.
There's nothing in the
There you go.
law
Okay.
that says that the appraisal district has to collect taxes.
Right.
Actually,
We're actually unique in that we do.
yeah, the majority of appraisal
Yeah,
districts in
majority do
Texas
not.
do not collect taxes. But there are a lot that do.
One thing I was just gonna add, in going through this contract, revamping everything, it's not saying, it doesn't delineate everything you do. It sets the bar on what is going to be done. If there's something that an entity comes to Jeff and says, or comes to the person and says, what about this? Where an entity says, wants to look at a report, has a question.
Yeah.
That's still available to do. This sets the agreement between the parties and almost like a statutory compliance minimum.
There you go.
And it doesn't necessarily you say you can't do something else. If there's something that, you know, the board and Jeff decides, yeah, that's a good idea. We can do that. If that helps communicate, transparent, then we can do that.
Aside from, because you used the word red line, we had our meeting to go over this. Jeff, Jody, Meg, Susan, they all started redlining some of the things that were actually in here. And each time I had to go back and say, no, you can't do that. It's statutory.
That's the law.
I mean, it's the law.
Okay.
And everything is being updated. And you may not like exactly how this is worded, but it's worded this way.
Okay.
because of the
That's
statute.
okay. Perfect. That's what I wanted to hear there. So if they do, because sometimes attorneys can, oh, I don't like it this way. Well,
Right.
you don't get to make that choice because the state put it this way.
Right, and that's what they were trying to do. If a lot of them like it that way.
Wishes, hopes, and dreams.
And they were adequately squashed.
Yeah.
We need to keep it this way because this is what the statute says.
Okay.
This is how it reads, and so it needs to be done that
Love that.
way. Yeah.
Okay, good. So then my next question is, do we need to make a motion to give you approval to move forward?
Let's see what the action item was. It was discuss and consider taking action to approve an updated collections contract with the tax units of Hood County. I didn't give you a recommendation for a motion, but I think it should be along the lines of, you know, I would make the motion. You might want to write this down. Someone may say, I move that. I would make the motion to approve the updated collections contract and authorize the chief appraiser to present it to the taxing entities for signatures. Is that good enough? Would that work?
Okay. Does anybody want to make that motion?
Sure, I'll make it.
All right.
I'll move to approve the updated collections contract and to authorize the chief appraiser to present the updated collections contract to the taxing entities for signature.
Second.
All right. So I've got a motion and a second to approve the updated collections contract and give authorization to the chief appraiser to present that contract for signatures. Is there any discussion? Kind of already had it, but my parliamentary procedure method, I always have to put it in there. So, all right, hearing none. All those in favor say aye.
Aye.
All those opposed say nay. It's a unanimous 4-0. There you go.
Thank you.
My old FFA Robert's Rules of Order. I always have to put a discussion in there.
That's true.
That's a good way to
That's
do
what it's
it.
supposed to be. And we'll get this out here in the next week or so. I'll have to do a form letter or
Yeah.
draft a letter and say this is why we're doing it. Some of them already know because Marcus and I actually went around.
Okay, good.
Was it last fall?
Yeah.
I know. Yeah, I think it was probably
It
last
was a
fall,
little
last summer.
warm, so yeah, it had been early fall.
So we went around and we drove to every single taxing entity and spoke to every single either finance person or superintendent or mayor or whomever and said, hey, we want to come say hi. Do you have any problems? And then, by the way, we're most likely going to be shipping you a new contract here in the future just to get the 1981 version updated to 2026.
Oof.
So,
Jeff, while we're still here, do you want to
Please.
address those three differences? There was you said there's three entities that were.
oh, yes. Thank you. Thank you very much.
Yeah, why was Hood County different?
I probably, Hood
The
County.
two mud ones, they're so small.
Hood County is special.
Okay.
In
Well,
the
we
law,
know, but okay.
in the law, we have the position of tax assessor collector. And when an appraisal district contracts with the tax assessor collector with a county, the tax assessor collector has to approve the contract.
Okay.
She has a say in this contract and this process.
Okay.
So it's been
Because she's the elected person to do that. Okay.
exactly, and they're deciding that they're going to have someone else do it instead of her.
Yeah.
Or him. It doesn't matter.
Yeah.
It's her right now.
Yeah.
So for years, we've had an annual contract with the county where it gets renewed every single year. Well, the last time we did it, it was going to be an annual contract. You may remember this.
Yeah. And we said,
I asked that, I talked to Andrea and said, look, Andrea, we're doing this every year. And she expressed the desire to never collect taxes because of the 2016
She remembered.
issue. Yes. And I said, well, let's do it this way then. Why don't we make it a contract that runs with your term as tax assessor collector, to where if you decide not to run again, then we'll do a contract with the new tax assessor collector. Or if you get defeated, we'll do a new contract with the next tax assessor. Or if you decide to run again and win, then we'll renew it. So that's what we did. We did a 4-year deal with her. Now, I will say that I probably will go back to her because that clause in there about the tax certificates is not in her contract, but it is in this one. And the same thing, the mud districts, the Crescent Mud District number 1, Crescent Crossroads Mud District, and most likely there's some talk about resurrecting the hospital district again.
Okay.
So I would say with them, I would most likely, I have current contracts with the MUDs, but again, they don't have that terminology in there with regards to the tax certificates.
They
So
don't get tax certificate money anyway.
they don't.
But it does say.
Yeah, and I would want to make sure their statutes are up to date too. So I'm not as concerned about those 4 entities, the county, the MUDs, and of course we don't have anything with the hospital now, but if they do resurrect a tax rate, then we'll need to get a contract with them back in place because we got fairly recent contracts already with them. So my focus right now is going to be on the ones that are in that 1981 contract, the schools and the cities. That'll be my main focus right now. And then I may visit with Marcus and Jake and say, hey, let's look at the MUD contracts, and do we need to update that? And then the county may be one that we might need to amend the existing contract and bring it up to date with this one.
Okay.
And by the way too, even though the county renews theirs on a more frequent basis, this one has a clause that it'll be a 1-year contract, but it automatically renews every year unless either party cancels.
Okay, good.
And we have an easy, I like to call it kind of the get out of jail free clause. Any party can cancel it for any reason whatsoever. All we got to do is just give enough notice. For example, if the city decided that they wanted to cancel contract and they want to collect their own taxes, it's fine, but you're going to need some time because this is a process that, it spans certain times, and, tax rate adoption is a certain period of the year and tax collect. So I think we have 180 days in there.
It's 180 days, and I saw it, and I'm glad you said that because I saw the 180 days, but then I saw the contract going into effect and then renewing, and I was like, there's not 180 days in that window.
Yeah.
So
no, the 180, the year thing is just if nobody wants to change anything.
Yeah.
The 180 days is to say, give us enough time to prepare the records that we could transfer them to you, give you enough time to go buy, lease, purchase a collection software system,
and hire people,
and most likely hire people, and maybe renovate some space to have collections.
Right.
So that's the reason for the 180 days. Normally we'd say 30 days. And
I remember seeing the 180 days in there.
Yeah. Jake and I just sat down and tried to think through how long would it take if someone says, we want out, we're going to collect our own taxes. And
very fast.
We kind of guesstimated 6 months.
I can't imagine what a disaster it would be if you went from one payment to, okay, I got to pay the school board, I got to pay the county, and I got to pay the city, and
let me tell you, when they did it last time, it was a train wreck.
I'm sure.
And it messed up every mortgage company escrow account in the nation. It was a train wreck.
That's a bunch.
Yeah, because every mortgage company was trying to pay in, and then all of a sudden they got changed, and they were paying twice, and I was getting phone calls like, "Why did my mortgage?" But it was because they paid, and then they got another bill and paid it. Well, they had paid the full bill over here, and it was a mess.
I'm
Oh, yeah.
I'm a huge proponent. I'll just say this, and this will be the last thing I'll say about this when we move on. But I'm a huge proponent that either appraisal districts need to collect all the taxes for all the entities or none of the taxes for none of the
Yeah,
entities.
yeah.
And if we're not collecting it, then quite frankly, I think the county tax assessor collector
Should collect
should
them
be the
all.
one that collects all of them for
It's-
everybody. It's just the way, in my opinion, it needs to be. It's kind of like the way it's done in Tarrant County.
Yeah. Well, when we come
Uh,
across one and it's got 4 different, and we don't catch one until the title company sends it later, that can definitely mess up a loan. So,
So
It's confusing.
oh yeah.
it's an all or
I
none
have
thing
clients
for
that have
me.
mo-
I mean,
have four.
Wow.
The school, the city, the county. and-
Like at a hospital district or something.
Right.
Yeah.
What's the point?
And if they're not all in the same spot and I'm running numbers,
so anyway.
Okay.
Thank y'all.
I don't think, and y'all don't have to stay unless you want to. Y'all are welcome to leave.
Yeah, you're good. Thank
Y'all
you.
are in
Thanks very
jackets and the air conditioner's not on. You are
Yeah.
definitely welcome to scat.
See you. Nice meeting you, sir. Yep.
Thank you.
Thank you.
Yeah, good to see you.
much. Okay, we'll be in touch.
Nice to meet you.
Thanks for coming.
Then you'll let us know. Appreciate the time. Have a good one. Thank you. Thank you. Go Rangers.
Yes, sir. Unfortunately, we've given up another home run since we sat down. It was 5-0 a minute ago. I don't think we have any reason to go to executive session. So
We
then-
just lost our lawyer, so.
Yeah, the lawyers just left. So, and everything we talked about then was not,
Attorney client.
there we go. Privileged information.
Privileged
There we go.
information.
Private was not the word I was trying to get out of my brain. All right then, Jeff, we'll go to the chief appraiser's report.
All right, I got 4 categories here. Appraisal report, we're finalizing the 2026 appraisals right now. Appraisers have a cutoff deadline for March 31st. And then we're going to start the process of building recalculating everything and then building the appraisal notices. And we plan on getting the appraisal notices in the mail April 15th.
I was going to ask that since we were paying the estimated bill.
Yeah.
So,
April 15th will be the thing. This board of directors passed a resolution many years ago that says basically that we only have to send appraisal notices to properties that go up by $1,000 or more. And we ran an estimate the other day. Looks like we'll be sending out about 26,000 appraisal notices. So that basically means that some values aren't going up and some values are going up.
so out of roughly how many properties
we
in the
have
county?
we have about 66,000.
Okay,
We have
so
about
a third.
we have about 11,000 mineral counts.
Okay, so take
So
those
we're
out.
down to 55, and then we're going to be sending about 26. So about
Okay.
half
About
of it.
half. Okay.
We are going to send appraisal notices this year on all of our business personal property accounts. There was a new law that
New
came
law,
in
yeah.
that said $125,000 exemption. We estimate that we have about 2,300 BPP accounts, and we estimate that 2,000 of them will be tax exempt.
Okay.
Now, it's the old 80-20 rule. 20%, 300. 20% pay 80% of the lion's share of the taxes on BPP.
Mm-hmm.
And so we're going to be exempting off somewhere between 75 to 80%, but they will be the smaller valued, honestly, the small business owners,
Mm-hmm.
things like that will get a tax exemption. But we're going to send this year appraisal notices to all those business owners so they can see on their notice you had $40,000 worth of value. There's a $125,000 exemption. You have 0 taxable value. And so there won't be, they'll be able to see it
Right. Good.
and get a confirmation that,
Tell them they're getting good
yeah,
news.
tell
Yeah.
them the good news, that basically. And then, but the following year, we probably won't send those out
Right.
again because the way the legislature wrote the law, next year, if they check the box that says my value is under $125,000, there's no requirement for them to even talk to us next year.
Okay.
It's all going to be on the appraisal districts to kind of look at it and say, did they add on a bunch? Did they,
4
what
new
did they do?
vehicles.
Yeah. We have one particular company that has historically said we only have $20,000 worth of BPP. and we have fought with them and fought with them and fought with them on it. This year they came back and said they had about $140,000 worth of VPP. You're going to get $125,000 exemption on that $140,000 VPP account. Go figure. We'll just leave that right there. So notices will go out April 15th. And everything's going smooth there as far as the appraisal side goes. Collection side, Susan, I remembered your name. Susan gave me a report this afternoon showing that we're not, as of the end of March, we're 95.3% collected.
That's what I said. We ought to be about done. So
Yeah, which means obviously less than 5% of the taxpayers in Hood County have not paid their taxes. And that's where Marcus and Jake kind of come in. They can't start doing anything on it until July.
okay.
We have to turn the delinquent roll over to them. And we'll get better than that 95.3
Still, yeah.
between now and July. But I will tell you that I've always said it like this: you've got the people who pay their taxes on time, you have the people who forgot to pay their taxes on time, and then you have the people that can't pay their taxes
Okay.
for whatever reason. We're kind of at that point now where when we get 95% in, we've gotten all these people, and now we've reminded these people, and now we're getting over to this point where there's not a lot left to go after. I mean, if a person's lost their job, if they just don't have the money, you can sue them all you want, you can write letters all you want, they just don't have the money.
Is it 95% of all accounts or 95% of all?
The tax collections, it's
Okay.
95% of the amount of money that we are
That's due.
expecting to get
Okay.
in. Yeah.
Okay.
Yeah, so you're right. We're down to kind of the end here.
Yeah.
And a tax collector like them would much rather us be at 85% collected
Mhm.
and turn over 15%.
Yeah.
Because when you start adding that penalty and interest on all that uncollected tax, it's real easy to get the taxing unit to over 100% collected.
Mm-hmm.
I mean, if a taxing entity is expecting to collect in $1 million and we're sitting at $955,000 or $950,000, when you only have $50,000 left, there's not enough penalty and interest to add to that to get them to 100%. They might get them to 98, 99%. But they anticipate that because part of the tax rate calculation process is we have to put in there what's the anticipated collection rate.
Right.
And most all of them set at about 98%. So they get to automatically, mathematically adjust their tax rate up just a little bit to account for the fact that probably not going to collect everybody's taxes for that year. Now, we'll continue collecting all throughout the years.
Right.
Real estate for real property, we can continue to collect the tax for up to 20 years.
Where do we categorize the older people who are taking advantage of I own my home and I'm over 65 and I'm just not going to pay till I die?
Well, they have to file what's called a deferral. If they file a tax deferral on it, then they legally have the right to not pay the taxes until they die, and the attorneys will not go after that. But that does get counted into that part of that 5%.
That's part of it. So some of it are deferred and will never be collected, no matter how good a lawyer they are.
In fact,
At
the
least
law.
in near term.
Yeah, and actually the lawyers are not even allowed to pester them over it. Not allowed to send them a letter. The only thing we can do is say, hey, just a reminder letter that here's your tax bill and here's how much is due.
And interest accrues on it.
But
That was my question. Does interest accrue on those?
at a 5% rate rather
Is it-
than it used to be 8%.
Is
Now
it-
it's 5%.
So here's my question. Is it 5 a year?
Yes.
Is it 5 a month?
5 a year.
Okay.
It's
So it's
simple-
really not, once you hit
simple
that
interest.
point.
It's not
And by the
cumulative.
way, once they pass away or they sell the property, they have 180 days to pay it at that lower rate. 181st day, it reverts back to regular penalty and interest, and we can file suit.
Okay. Okay. So they've
But
got
if-
6 months at the 5% simple interest. Okay.
I actually advise people all the time that when you turn 65, file a deferral. I told my mom and dad, when you turn 65, file a deferral. Why? You can still pay your taxes. There's nothing that prohibits you from paying your taxes. But if you get into a situation, maybe you come up with a medical problem, like my dad, he came down with bone cancer. Well, they had to pay hospital bills and this and that. Well, maybe they have to use some of the money they've been saving for property taxes to pay these other bills. Well, if you've got a deferral in place, you've got automatic safety net to where it's like, oh, we didn't have the money this year because we had to pay for this medical expense. No problem. Don't pay your taxes. If the next year you do well and you decide, you know what, I don't want my kids to have this delinquent tax, I think we'll go back and we'll pay up last year. You can. So I tell people all the time, file a deferral, keep paying your tax if you want. But it is a great safety net that in the event that something happens and you get slammed with a really bad issue, use that tax money to pay for whatever you need to pay for, and don't worry about it. Just keep going, and then when things get better, start paying again.
Right, and this also qualifies for disabled.
Yes, it does.
Okay.
Yeah, just to say, actually, the laws have changed so much now that basically, regardless if you're 65 and older or disabled, the same benefits apply to either one. The only difference would be is you can be disabled before you're 65. So if you became disabled at 45, you get to enjoy the same benefits that the elderly get to enjoy.
Now I'm working. What is I need to ask later.
Okay.
I need to ask that question later.
So serious.
Okay, because I'm thinking about bars that I've had. Okay,
We can advise you.
yeah, we can advise later what I can tell my clients.
So we're doing, when I say we're doing good on collections, we're doing good, but you know what? We're at the same point we were pretty much last year.
Okay, that was my next
Hood
question.
County is actually really, really good at paying their taxes on time. Or maybe a little bit late again. We got a large group of people that pay on time, a small group that's like, oh, gee whiz, I thought Sally paid that already, and Sally thought Bob paid that already, and then they come in February and pay it when we send the reminder letter out.
Later.
But then we got a small group out there that just, for whatever reason, either they won't, can't, had a circumstance that came up, they're tight or something like that, lost a job, whatever the case may be. Okay, I've put a couple of other things on there. I really don't have anything to report on district operations. You're going to see these 4 items on our agendas kind of going forward, just as placeholders. We put a board member Q&A on here because at the last board meeting we got several questions, and I would totally respect the fact that you and James, being new, would want to ask some questions. But sometimes people would think, wait a minute, that's not on the agenda.
Right.
And
Yeah.
so I put this particular line down here so that if we did have some questions about something else, that this would fall under that part of the agenda to where we could have, and I would obviously caution you if we get into some issue that might need a decision that made, I could possibly say, you know what, let's don't talk about this anymore. Let's put this on as an action item, and then we'll have a more in-depth discussion at that time. But if it's just general kind of questions like Scott has asked, I think it definitely can fall under this particular thing, but it's not material and it's not going to it's not substantial. It's just information.
Yeah.
That type of thing. So with that, I'll close.
Okay. Yeah. Does anybody have any questions at the moment for Jeff? All right, then
Next meeting on the 16th.
let's check our dates. So I know I'm in town that day because I'm out of town the week before.
April 16th.
Yep.
My 36th wedding anniversary is April 7th.
Nice. April 7th? That's my youngest's birthday.
Thank you.
Your sister's birthday? The youngest will be 19 that day. I'm good. Everybody else look to be good?
Good. I'd like to add an agenda item for our next meeting. I'd like to add a discussion on whether to let the Feinberger contract auto renew, or if we should go out and bid the collections contract.
Okay. Did you get that, May?
Yes, sir.
Okay. I won't write it down if you wrote it down. All right, we'll put that on the agenda.
Perfect. Anybody want to adjourn?
Move to adjourn.
Second that motion.
Got a motion and a second to adjourn. All those in favor say aye.
Aye.
Ayes have it. We are adjourned at 5:49 p.m.
Getting better.
Once again, done in under an hour.